In the Philippines, we have ING, CIMB, GCASH, and TONIK. They are sort of digital banks that mainly operate online. And today we will discuss the few things to think about before you put your money in any of these banks. Disclaimer, this is not financial advice. I encourage that you study and conduct your own research or seek professional financial advice if necessary. For the purposes of this video, please keep in mind that when I say traditional banks, I'm referring to regular banks that have brick and mortar locations at ATMs across the country and mostly rely on physical documentation like PNB, BDO, BPI, Security Bank, East West, etc. Digital banks, on the other hand, are banks that operate mainly online and processes are mostly done via electronic. Traditional banks, such as BDO and BPI, as I mentioned earlier, have 0.125% interest rates, while PNB has 0.10% interest rate as of this writing. This means that if you have 5,000 pesos in your BDO account, you will only receive 6 pesos and 25 cents in interest in 1 year. So that's 5,000 times 0.125%. It can't even keep up with the Philippines inflation rate, which was 2.9% in 2020. So, what is inflation? The price of the product will be determined by the rate of inflation. It shows whether prices have increased or decreased by a certain percentage. For example, if the annual rate of inflation for bread, pasta, and other bakery products is 2.1%, prices will be 2.1% higher the next year. So because of inflation, your money now will be worth less tomorrow. That is why you must strive for a higher rate of return than inflation. And at the moment, traditional banks do not provide interest rates as high as digital banks. So let's now discuss the advantages first, and then we will discuss the disadvantages after. First advantage is lower cost and higher interest rates, so it's a win-win situation. Digital banks can offer better interest rates and lower fees because they do not own or have little physical infrastructures and have a low fixed operating expense. They do the majority of their work online, hence the term digital. This benefits us as investors because the bank can offer us better interest rates because they don't have to invest or spend as much in their business. Better online banking capabilities. The digital banking system is centered on online banking. So they have done a lot of research on how to provide efficient online customer support and streamline their processes. Traditional banks are still working to improve their online banking experiences to compete with digital banks. In the past, you had to physically go to a bank and complete a number of requirements to open a savings account. Digital banks, on the other hand, allow you to just take a photo of your requirements and upload it right into their system. Deposits are PDIC insured. Deposits in digital banks are covered by the Philippine Deposit Insurance Corporation, much like those in traditional banks. The purpose of the PDIC, or the Philippine Deposit Insurance Corporation, is to protect depositors by providing deposit insurance coverage to the general public and to aid in the development of financial stability. So this means that the government guarantees that if a bank goes bankrupt or fails to provide your money, you will be able to get your money back. They will, however, only insure up to 500,000 pesos. Anything beyond that will not be covered. No minimum maintaining balance required to earn interest. Most banks will need you to keep a certain amount of balance in order to receive interest. This means that you must keep a certain amount in your account to earn interest. And if you don't earn interest. The digital banks, the digital banks I mentioned earlier, ING, CIMB, GCash, and TONIK, don't have a minimum balance required to earn interest, and they also have higher interest rates as high as 6% for tonic deposit accounts. Okay, so that's it for the disadvantages. Now let's go to the disadvantages. First one being no personal relationship. Because the business is primarily conducted online, you can only contact the employees by phone or through their chat box. Unlike traditional banks where you can go in and talk to a teller, you won't be able to do so online. So if you prefer to speak with someone directly to resolve a problem, you might want to consider keeping your money in a traditional bank. Lack of ATM machines. ATM machines are not available in digital banks. You can, however, withdraw money from any banknet or partner ATM. You should also be aware that when you withdraw money from a separate ATM machine, you will be charged a transaction fee. So that's something else to think about. Limited products. Currently, digital banks only offer savings accounts and term deposits, whereas traditional banks offer insurance and personal investments. If this is an important consideration for you, then you need to explore other traditional banks. Yeah, that's it for the disadvantages as well. That covers overall, that's the advantages and disadvantages of using digital banks to keep your money. Let me know if you can think of other advantages and disadvantages in the comments section below. And I hope this video will be helpful. And if you enjoyed this video, please consider subscribing, liking this video, and hitting the notification bell for more content. Thank you for watching.